What's going on, everybody? Jeremy Hritz here. Courage pays better than fear. Trading with the Courage Pays Better Than Fear Mini to talk about one of my favorite chart patterns. It's very simple to spot, and if you're a bull, you really do like this pattern because it typically signals a move higher. And today we're going to talk all about the double bottom. Let's go. So there are particular chart patterns that I'm going to be going over here in the next several videos, these Courage Minis, that tell us or give us an idea of what potentially is going to happen with a particular stock using its candlestick chart. And today we're going to talk about the double bottom as I previewed at the start of this video. And typically what we're looking for in terms of double bottoms is we want to know where strong support areas are on the stocks that we are trading. And this is where having a handful of stocks that you're intimately knowledgeable about is going to give you that insight because you've studied the charts, you know where those support areas are. And when we know those areas and we see a double bottom coming in, we have great confidence that we're about to get a bounce. Now, just like anything in trading, nothing works 100% of the time. To quote my man, Jeremy Newsom, it works, just not all the time, and that is definitely the case for double bottoms. So I'm going to go through the three types of double bottoms that you can identify, which ones I like to trade the most. Let's jump over to the chart. All right, so I have an Amazon chart up here on my screen, but before we start looking at those candlesticks, what is a double bottom? Well, it's exactly what it sounds like, and let me go ahead and draw this here on the screen. This is a double bottom. It's a W. Okay, and essentially what we have here are two bottoms. We have two lows that are made by the price action. And the way that I like to look at double bottoms is I like to classify them in three different ways. Here's a symmetrical double bottom where you have equal lows. There's also a higher low, lower low double bottom. You can see the higher low here, the lower low here. And then there's also lower low, higher low double bottom. So you can see the lows here. Now, my favorite of all three of these different types of double bottoms is the lower low, higher low double bottom because it shows that the bears pressed the price action down to begin with. It got pushed back up. They try to drive it down again, but the bulls stepped in and wouldn't let it get back down to that low. And that shows strength that the bulls are now going to push that higher. Okay. And again, when we can find these in support areas on our charts, it gives us great confidence that we're going to get a bounce. The other thing that we have to keep in mind when it comes to double bottoms is this middlemost area of the pattern, whether it's a candlestick body, an upper wick, that is known as the neckline, right? And it occurs right in the middle of the pattern. And I'll show you that here in a few minutes. And whenever we get a close above that double bottom neckline, that's a confirmation of the pattern that it should then move higher. So let's take a look at this on the chart here. And you can see this is just a simple Amazon chart. And I have the 100 and 200 simple moving averages on the chart. Simple moving averages just being general averages of the price over a 100-day period or a 200-day period. And you can see if we zoom out and if we just use our simple moving averages as supports, we could see here that the blue line is our 100, the red line is our 200. So here we go. So if we just zoom in here, all right, support here, this 100 SMA and this 200 SMA, we can see very clearly that we have a double bottom, right? Now, if we were to classify this, like I talked about the three different types of double bottoms earlier, this is a higher low, lower low double bottom. And the fact that this bounces, it doesn't bounce off perfectly, but near that 200, that gives us confidence to say, hey, we know that there is support here. This should move higher. Now, I also talked about that neckline. We could see that occurring right here, that middlemost candle. Let me zoom in on this so you could see it. Make this bigger right here. So this upper wick right here, that's going to be our neckline. So if we're trading this or we're studying these patterns, we could just mark it with a line, and we know that any type of close above that neckline confirms the pattern and we should get a move higher. And so what happened on Amazon after this double bottom? Well, you could see that this pushed up and up and up and up and up, right? And so does this happen all the time? No. And again, we're looking at a daily chart, but in this instance, we see the double bottom. We're using our simple moving averages, and it makes a nice push higher. Let's take a look at one more here. We could see, let's try to find, we're going to switch over to, let's just go over to a 1 hour chart because I want to show you that these occur on all different time frames. And let's just zoom in and make it a little bit bigger here. And let's just go through and see if we can find one. All right. And here's a smaller one, right? Because these aren't always going to be massive moves like the one we just looked at on the daily chart. But you could see right here, we are clearly in a downtrend. This is back from August 2023, clearly in a downtrend. And then we find support here and we make a low, we push up higher, and then we come down and we make a higher low. So these are the types of double bottoms that I prefer. Your lower low, higher low, double bottom. Here's our neckline. And we push up, confirm with this candle, and then it goes higher, right? And so you could have set up a simple day trade on this or a swing trade and exited rather quickly, or you could have been patient and stayed in this trade for quite some time and waited through the retest, because oftentimes what's going to happen in a double bottom is you'll get a retest of the neckline. You could see where this comes down here, they're selling, and notice its bounce occurs right where that neckline is, and then it starts its push higher. Okay, so a lot of times traders will get afraid of those retests whenever it starts to drop, but just know that's a natural part of movements in stocks. And a lot of times that's where traders lose because they get afraid, but just know that's a natural part of the process. So that is your double bottom. And remember, 3 different types: symmetrical, higher low, lower low, lower low, higher low. Those are what I prefer. And again, we're trying to find these near support areas. If you throw your 100 and 200 simple moving averages on your screen, that will help you out significantly in terms of identifying support. And that is the pattern. So hopefully you're leaving this video with a better understanding of double bottom patterns, how to trade them, how to use them in your swing trades, your day trades, or even for your long-term investments. Let me know what you think in the comments below, any questions that you have. And this has been another Courage Pays Better Than Fear Mini. Jeremy Hritz. If you want to learn more about trading, reach out to me, couragepaysbetter@gmail.com. And be on the lookout for more videos coming your way here from Courage Pays Better Than Fear Trading. Have an excellent day, everyone.